Morning, guys. It's Monday, September 8th, 5:24 a.m. Central Time. Grain markets are mixed to start off a new week. December corn futures down 1.25 at 4.16 3/4. November soybeans up 2.5 cents at 10.29 and a half. December Chicago wheat down a quarter cent at 5.19. December Kansas City wheat up a quarter cent at 5.05 and a half. December spring wheat down a quarter cent at 5.65 3/4. We had some nasty weather over the weekend in the northern plains. Why don't we start off there?
So, some U.S. corn and soybean areas saw freezing temperatures over the weekend. Temperatures early Sunday morning fell below freezing in parts of North Dakota, South Dakota, Minnesota, and western Nebraska. The extent of any crop damage is unknown at this point. The markets are clearly disinterested to begin the week, given a mostly lackluster trade.
I wouldn't take any of these maps as gospel, but I think it's a fairly decent indication. I don't know if the crops are far enough along, or perhaps, probably more likely, the freeze probably didn't last long enough to have a big time impact. But I don't know. I don't have the details. I didn't hear reports of a ton of damage. So if you're in North Dakota, if you're in South Dakota, one of the maps said it did reach into western Nebraska. I'm not sure if that's true or not. It looks like some of this freezing stuff got into Minnesota. If you're in those areas and you have damage reports or lack thereof, drop them in the YouTube comments, or you can send me an email to info@standardgrain.com. But the market's not interested in this. That doesn't mean it didn't do any damage, though. The market misses stuff like this sometimes. But for the moment, we're going to say non-issue unless you guys tell me otherwise.
USDA reported two flash sales on Friday. U.S. exporters sold a total of 12 million bushels of soybeans to unknown destinations for delivery during the 25-26 marketing year. Accumulated soybean sales for the current marketing year are down 32% compared to the same period last year.
Unknown destinations in for beans. We'll take the business however we can get it. As it stands now, for the now current marketing year, unknown destinations have been the largest buyer of U.S. soybeans on the export market. They account for 41% of all U.S. export sales for, again, the now current marketing year. Mexico would be a very distant number two. Could some of these sales be to China? I suppose that they could be. Although you look at basis levels in the cash market in the northern plains in particular, where basis is just fallen off a cliff, some of these buyers in North Dakota and elsewhere, they may just simply go no bid on soybeans because they've got nowhere to go with them. Typically, they'd put them on a rail and send them to the PNW and they'd get shipped to China. That's not happening right now. So I don't know. I mean, some of this could be China. Maybe it's not China, but we've still got a big kind of gap in the export sales book when it comes to soybeans, and we'll talk about that here in a second.
New crop U.S. corn export sales were near the upper end of pre-report expectations last week. Weekly net new crop sales were reported at 83 million bushels. The print was up marginally compared to the previous week, with Mexico as the largest corn buyer for the week. Net new crop soybean sales were reported at 30 million bushels. The print was down 40% from the prior week, with unknown destinations listed as the largest buyer for the week. Net wheat sales fell below expectations at 12 million bushels. The print was down 46% from the previous week and 51% from the prior 4-week average. Nigeria was the largest wheat buyer for the week.
Okay, let's run through all the charts. So here's old crop corn. The marketing year is now over. It was the best program of the last 10 years. I think the best on record. So fantastic corn export program last year. Soybeans kind of toward the lower end of what we've done over the last 10 years, fourth worst or seventh best of the last 10 years. Wheat sales are really good, and you wouldn't know it by looking at the wheat market, which has acted terribly. My understanding is that Russian export pricing continues to kind of leak lower, and that's why there's been pressure on the U.S. futures market. Here's a new crop or now current marketing year corn sales, best on record. Absolutely phenomenal. The business keeps coming in. We're priced competitively. Fantastic stuff. Here's new crop or now current marketing year soybeans, second worst of the last 10 years. We're about 3.8 or 3.9 million metric tons below last year. And curiously enough, that's about what China had bought last year at this point in time. So if China was here and if they had bought what they had bought last year, we'd be about on par with last year, which is still not great, but it would be better. So this is problematic, certainly. Here's a new crop again, now current marketing year export sales to China, zero on the books. They had 3.9 million last year, 6.4 million the year before, 11.4 in 2022. 2021, they had 7.9. In 2020, at this point, they had 13.5 million metric tons of U.S. beans on the books. The way that this is going to work, my understanding is like this. So China typically buys U.S. soybeans for delivery during our window that's immediately post-harvest, October, November, December into January a little bit. That's when Brazil has kind of exhausted its supplies, and then the new crop Brazilian beans come online, late January into February, and that's when the U.S. export window kind of closes. My understanding right now is that China has booked some Brazilian soybeans for October and perhaps November delivery, but it's probably not enough to fill the void entirely. Last year, China bought the equivalent of about 2 months worth of needs of soybeans from the United States. And if they don't do that this year, they risk drawing down their stocks substantially. And I don't think that's something that they want to do. So I'm still of the opinion that China would probably like to buy some U.S. soybeans. Maybe they wait for some kind of lull or resolution to the trade war, or maybe I'm totally wrong and they don't. I just don't know if they're going to be able to fill the void left by the U.S. entirely by Brazil, because to this point, my understanding is that they haven't bought enough. They bought some beans from Brazil for delivery during the normal U.S. export window, but probably not enough to fill that hole. And I'm not sure if they're going to really want to draw down the stocks. Keep in mind that the tariffs on U.S. soybeans are imposed by China. China is billing its own importers for the tariffs. That's how this stuff works. The Trump tariffs, they have nothing to do with soybeans. The soybean tariff is a retaliation. China's retaliating against the United States by imposing tariffs on U.S. soybean, but they can waive the tariffs if they want to. So if they really need the beans, they'll waive the tariffs. They haven't done so yet.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
This video that Shay did was awesome. So we sent out a survey of our subscribers, and I think he posted it on Twitter too. He had a ton of responses about fertilizer pricing, and he went through all the products and he laid them out on a map. And the most interesting thing about it was that he displayed like the spreads in pricing at given locations, and they're absolutely phenomenal. So I know that this is not a transparent market. Like the retail fertilizer market is not transparent. Everything's done behind closed doors. Nobody wants to make their stuff in their region and all that stuff public. You guys have got to go shopping around is the way that this sounded to me, because times are very, very tight. And if you want to know exactly how bad it is, Shay kind of laid it out in this video. Jim Urio was on Friday. We did Macro Friday, debt-induced heart attack. We've got a lot of debt problems here in the United States. And we talked about that. We talked about the Fed. We talked about interest rates. We talked about inflation, all those things. Jim is a fan favorite. Absolutely fantastic. One other thing that I would like to pitch today, registration is open for the AgView Executive Business Conference, which will be in Arizona. I believe the dates are January 21st through 24th. This is my friend Chris Barron. This is his conference. And all the familiar faces that our premium crowd is familiar with, they're all going to be there. Brian Splitt's going to be there. Matt Bennett's going to be there. Jim Urio, Pete Meyer, Ryan Moe, Paul Neefer, Shay, Chris, they're all going to be there. I am venturing out of my hole to speak at 2 different meetings this year. It's this one, and there's one other one that I can't tell you about yet, but only twice. I only leave twice. I used to travel a lot, Mackenzie. Did you know that?
Yeah, I did know that.
I used to drive like 100,000 miles a year,
Yeah.
and saw people all over the country. And now I'm chained to my camera and microphone. But in any case, guys, the registration opened for this today. You can go to the AgView Solutions website and sign up. It's going to fill up fast, especially because we're advertising it here. So check that out. Check out the premium deal. Remember, premium deal is $50 a month. Chris's stuff, all the pricing, everything's on his website.
S&P Global is projecting a record large U.S. corn crop. Based on its agribusiness survey, the firm pegs the average corn yield at 189.1 bushels per acre, with total production estimated at 16.77 billion bushels. The average soybean yield is projected at 53.8 bushels per acre and production at 4.31 billion bushels. For comparison, the USDA currently estimates the average corn yield at 188.8 bushels per acre and soybeans at 53.6 bushels per acre. The USDA will issue its updated crop estimates on Friday.
The S&P Global Survey it's a farmer survey. It's been used similar to the StoneX survey. It's been used for decades. Depending on how old you are, you may know this as the S&P Global Survey. You may know it as the Informa Survey if you're a little bit older than that. If you're even older than that, you may know it as the Sparks Survey. My understanding is that the survey has been doctored over the years and may not quite have the integrity that it once did. I don't think this yield number is reality. I think they're too high. I think most of the trade believes that USDA will come down on Friday from its 188.8. but never say never. Rainfall in July was really damn good in a lot of places.
The funds trimmed their net short position in the corn market for the third straight week. For the week ending Tuesday, September 2nd, large money managers were net buyers of 16,000 corn contracts. The net short position of 95,000 contracts is the smallest since late May. The funds were also net sellers of 8,000 soybean contracts and 417 SRW wheat contracts on the week.
Premium subs, you guys have the fund tracker charts in your email this morning. So there's been some short covering in the corn market. Who's been the other side of that trade? It's been the commercial. The commercial or producer category has been adding to their net short position in the market. And that's probably indicative or could be indicative of farmer selling. It could mean a lot of things, but probably some farmer selling. So you're getting back more toward a close to agnostic position in the corn market. 95,000 contracts is not really substantial. Funds, interestingly enough, still sitting here long the soybean market for whatever reason. I mean, that's not a super aggressive long, but the fact that they're long at all is interesting. And SRW wheat continues to be the piss and post. They just stay short wheat indefinitely.
U.S. job growth slowed in August as the unemployment rate ticked higher. The Labor Department reported on Friday that the economy added just 22,000 jobs last month, well below expectations of 75,000. Unemployment rose to 4.3% from 4.2% in July, the highest since October 2021. The June jobs report was also revised lower, now showing a loss of 13,000 jobs, the first monthly decline since 2020. According to analysts, companies are pulling back on hiring amid tariffs and economic uncertainty, while consumers remain cautious about rising prices. The report reinforces expectations that the Fed will cut interest rates at next week's meeting.
Yes, 4.3% unemployment it's historically low, but it's about the highest that we've seen in the post-COVID era. So there is now a little bit of concern regarding the job market. But because there's concern, that means that the Fed is damn near guaranteed to cut on September 17th. There's now a 90% chance of a quarter point cut and a 10% chance of a half point cut, which is phenomenal. And that's why the stock market is probably going to open near all-time highs this morning. It's not because of the jobs data. It's because we live in this backward world where if money's cheap and easy, then risk assets rally. I talked about the economy very, very briefly. And of course, there needs to be some context added to this. I said last week, and people got mad at me. I said the economy's, in okay shape. And people are like, no, it's not. It's terrible. The economy in reality is this. We live in a K-shaped economy. We had a K-shaped recovery out of COVID, and now we've got a K-shaped economy. Because the government has printed so many trillions of dollars, most of it in the name of COVID, but for other reasons also. There are two groups of people in the United States. If you own assets, if you own risk assets, which have continued to skyrocket in value, whether it be the S&P 500 or gold or silver or Bitcoin or real estate, whatever it is, you're doing just fine. If you're in that kind of lower, call it half of the population, I don't know what the percentage is, but you don't own assets, you're screwed because inflation's eating you alive. Some of the data would suggest that more recently wages have kept up with inflation, but I mean, that's a tough pill to swallow. Everything's as expensive as it's ever been. So the economy is depending on who you are, it can be either very good or very bad. And there's not a whole lot of in between. What did cattle do on Friday?
Cattle futures were lower on Friday. Live cattle were 97 cents to $1.40 lower. Feeders saw losses ranging from 105 down to 282. Cash cattle trade was mixed last week. In the Texas Panhandle, cattle were steady compared to the prior week at 242. In Kansas, cattle were steady to $1 higher at 242 to 243. And then in the North, cattle were $2 to $3 lower at 242 to 243.
Dow Jones is up 70 points. The S&P is up 16. Treasuries are off just a little bit. U.S. dollars about flat. Crude oil is up $1.31 in the October WTI at 63.19. Have a great week, guys. We'll be back on Tuesday.